Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York on Wednesday, the 26th day of February 2014, and this is the daily report for gold and silver. We do have lower pricing across the board in the precious metals markets, a fairly moderate size sell-off today, with gold currently trading off about $12 on the day, almost 1%, low $13.2160, high $13.4660. Current print $13.28 and change. We did put out a special notification this morning that for those who did not raise their stops to $13.29 as an alternative, our suggestion is we're moving our stops to just below $13.26. Stops have not been hit, but I wouldn't be surprised if in fact they do get hit at some point today and pull us out with a quite nice profit on this last trade. Silver also trading under significant pressure today. As you can see, current print 21.21, the low 21.01, high 22.14, and this puts it off about 3% on the day, or 65 to 66 cents lower. More on silver towards the end of the show. Now, ever since we put out our special trade alert and we have officially raised our stops just below 13.26, market's been fairly stable, trading roughly at around 13.28, 13.29. One of the things is, as you know, we were looking at different targets, and our targets that we were looking at for potential tops in the market, our primary target was roughly in this area, about 13.29. We certainly exceeded that. And you can see that this market traded to a high. This is 1340 here, so call it 1344, 1345. Those are the highs that we saw today. We saw those highs right in here, but just following that, we had profit taking coming into the market, and we can see these lower pricing ahead. Now, one of the things that we'll want to look at on today's show is if we do get some sort of extended correction here, my belief is that we're probably going into that B wave. We've talked about that, our A, our B, and our C. And when we look at it in terms of a very, very short-term chart, this chart here, 240 minutes, this would be our A. So we're going to want to calculate a fib retracement and look at different levels in which we think this market could drop to, and therefore places to position ourselves back on the long side. In other words, we'll sit on the side, see how this market wants to trade and how much lower it wants to go, and then try to catch that pivot point for this C wave up. Now, one possible way to look at different support levels, if this market does fall under pressure, as we believe there's a decent opportunity for that to do, this is our Andrews pitchfork. Of course, our handle is derived from the record high at 1920, and the two arms, so to speak, of this pitchfork, meaning our 0 and 100%, are derived from this low here and this secondary top here, 1800 on the top, and I believe this is going to be around 1535 in that area, because those were the lows as we had that flat bottom, if you recall, from 2012. So as the market goes down, we want to look at different areas, and it certainly has made it above this 23% level. And so what we want to see is if it falls, is it going to fall through this level? Because if it does, the next logical place to look for is this 38%. Now that's using these cascading channel lines that we get from an Andrews pitchfork, but there's a couple of ways that are a little bit more refined to give us some more eloquent numbers on what we could possibly be looking at. And for that, we'll need to pull up another chart. So to take a look at a potential market move to the downside, what I've simply done is we've pulled up a weekly chart, spot market of gold. In this weekly chart, I have created a basic fib retracement, which starts at the 1180 area, takes us to this tentative top, which is sitting at 1345. We see that, first of all, it does match very, very roughly this one top that we talked about. This was our Our first target, of course, was 29. Our second target was right in here. And then our third target is got to be this top up here at 1435. Now, when we do that and we look at different areas the market could fall to, a 23% retracement would take the price of gold to about 1306. A 38% retracement would take the market to about 1282. Now, I am looking at the entire move of this A wave, and typically a B wave can go anywhere between 50 and 75% that of A. So a 50%, and I'm not really saying that the market's going to go there. We're looking at straight Elliott wave, and we have to see if we get a really protracted and defined correction. But it could take you, in terms of the area itself and the marketplace in terms of where it could move, it could take you, to 1260, 1270. Now, I personally don't anticipate a move that dramatic right now, but we have had this dramatic upside move. If the market does not find any kind of support just at above 1300, and if you recall, our original stop, well, not original, but our last stop prior to just moving this stop was just below 1307, and you can see how that kind of fits into this 1306.51. This is a 23% retracement, and that's really kind of where we got that number. The last move that we really charted a retracement was simply from here to here, and this was 23%. And so what we'll find is that if we actually break down this weekly into a daily, let's go ahead and do that, then we get a market that has a little bit more noise because we're using the daily charts, and we can start to see some sort of a sub count. Right in here we get a 1, maybe a 2 here, 3, 4, and our 5th count. So if we look at the market through these eyes right here in terms of a sub count, 1, 2, 3, 4, 5, we have probably most likely completed our A wave. And then, of course, from our A wave, we're going to go into some sort of a B, which will be broken down into a sub count, and then into our C. Now, in terms of where the market might fall to, that, my friends, is obviously the $64,000 question, and we'll have to see how it unfolds. But right now, we're positioned just fine. In other words, if the market does continue to drop, and I actually expect it to, but I have been surprised many, many times in the past, but if it does continue to drop, these are the different areas that we want to look at as a potential conclusion to that B wave. But I think that when we look at this market in terms of how it's broken down, we can, with some certainty say that we most likely have concluded our first rally, that being our A wave. We are probably in store for lower pricing, although we'll have to see, because the dramatic thing about this rally has been that it's been characterized by either sideways trading activity followed by dramatic spurts followed by almost sideways trading activity. And we could then again be witnessing a little bit of sideways activity before it spurts higher. So I'm not 100% convinced that we're going to see lower pricing. However, if we are, these are the first things that we would see in the marketplace as that scenario unfolded. Now, we're looking at our daily chart, and this is the daily chart that we've kept our sub count as well as our intermediate count. This 4, of course, is an intermediate 4. This is the conclusion of our intermediate 3. If we look at the way this kind of count unfolded, this is that long-standing resistance line that we finally broke, and that was our signal right in here to enter the market from the long side. If we look with this long wave 3 down, I was able to derive a 5 count on the way down. A, B, and C, this is our wave 4. 1, 2. My belief is that this is our third wave. We had that bear market truncation in which we had less than a 5 count down there. If that's the case, we've got some sort of an A, a B, and a C going on. Now, the thing that I am looking at also is the fact that when we look at this just from straight trend analysis, it appears as though we might have this double top forming. And so we want to see really how dramatic this most recent market pressure kind of unfolds. And in terms of different areas, you can also see this is a much longer retracement, but this retracement's 1302. So you've got 1302 and 1306. It is quite logical to me that what we might in fact witness is the market get a very, very shallow retracement, holding above 1306 or 1302, and then a move up. As I said, we'll have to see how this unfolds, but we did get our first signs of weakness, and we can certainly see that within the marketplace today. Silver has just been a dramatic mover in the marketplace, and in terms of looking at this particular move up, let's put in our fib retracement so we can look at different areas that we could possibly find support in silver. Let's go ahead and put those. And once we do that, let's go ahead and kind of define this a little bit better. But once we do that, here's what we get. We have basically just put in a fib retracement from these lows right at around $19 per ounce up to $22 per ounce. Our 23% is 21.34, and then 2090 is going to be our 38% retracement level. So what we could see, one possible model is we've gotten this tremendous spike up, market comes down, finds support right below $21 per ounce, and then we signal a return or a final C wave, similar to what we are currently seeing in gold. Market still trading roughly 1328, 1329, simply a couple of dollars from our stop if we do make lower lows. And I might not expect them so much here, but I wouldn't be surprised if we see a carryover or spillover once the market moves into Australia, of course, after the break, and then into Hong Kong in the evening session tonight. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.